Meantime, let's get in a fundamental voice as well on the show. Ritu Arora, CIO, Canara HSBC OBC Life Insurance with us on the show. Ritu, lovely having you with us. Walk us through what you make of the market climate right now, given all that's going on overseas as well as the kind of earnings that have transpired. What do you make of it?
Thanks for having me on the show. I believe market is searching for its direction, is very much in a phase of consolidation, which is not a surprise really. The global turmoil, volatility continues. I think different countries are finding their own new normals, be it US or Europe. And so we have a mix of different kinds of news flows coming in from there. At home, the earnings season to me has been the results that are already declared are in line or are slightly better than expectations, which augurs well. I hope the companies that will declare results now will follow suit as well and meet expectations, which I think is a very positive direction. And in the next couple of quarters, if that is sustained, I would like to believe that in the second half of this year, we could actually be seeing this positivity sustain and a rally in making.
So what else is your view then, Ritu, right now, considering the market has a lot of global data points as well that one is going to grapple with, the June Fed policy meeting, the Brexit and the monsoons are yet to really play out as per predictions by the IMD. Sectorially, what do you think is going to hold out in these uncertain times?
There's only two ways, as I believe, one can construct a portfolio in such uncertainty, and I've been speaking of it. So I like to have a balanced portfolio, diversified, but with keen eye on earnings. So I have a bottom-up portfolio rather than a top-down sectorally allocated portfolio. And earnings is the only visible factor in all this chaos and turmoil. And I like companies which have been demonstrating steady earnings growth and have the potential to grow. The second aspect from which I am looking at portfolio construct is domestic cyclicals. The economic factors around India, the macroeconomics are looking better. We see a lot of green shoots. Hopefully they'll get greener rather than brown and die out. And that bodes well for domestic cyclicals, and I would like to position for growth recovery there in domestic cyclicals as well. So it's a well-balanced portfolio with eye on quality and with a little bias for domestic cyclicals.
So I want to talk a little bit about the consumption stroke FMCG space. It's in focus today. ITC, very upbeat. Lots of brokerages are happy with the kind of numbers they've delivered. On the other hand, it was the phasing out the excise incentives which really hit Britannia's numbers. What is the assessment that you've made of the kind of volume growth that we've seen for the FMCG companies, and do you think that going forward on account of a strong monsoon and revival of the overall economic cycle that this is a sector to reckon with?
Definitely the results have surprised us on the positive side as far as the volume growth is concerned. Across the spectrum, the volume growth has been sturdy. We've discussed of internal challenges in terms of new entrants, be it Patanjali or others. But by and large, all FMCG have demonstrated good volume growth, which is very positive. And I would like to believe with a good monsoon as well as Europe and in general the positivity coming back, it would be a sector that should do well. Not just FMCG, but also probably consumer durables will benefit from more money that people will have in their hands going forward.
Right. What's the expectation then, Ritu, considering what we've seen from PSU banking as a sector per se in the past and the kind of disastrous numbers that one has seen from the likes of BOB or for that matter PNB as well. SBI is going to come out with its earnings just this week. What is the expectation largely? Do you think asset quality is something that PSBs will grapple with for the next few quarters to come, or do you think there could be some like an SBI which could perhaps turn around from this quarter itself?
I would worry that there might be still a little stress that we might see in PSU banks, and one will wait to see an improvement before one sticks neck out. And I would like to continue to be underweight public sector banks for now and continue to have investments in private sector banks. I would like to believe that with the return of growth in the economy, in next couple of quarters, the worst should be behind public sector banks, but I would think the immediate concerns will be around capitalization. There's a lot of talk around mergers, which will mean a lot of news-driven stock-specific movements in the market. But as a sector, I would prefer a sub-sector would be private sector banks.
Okay, thanks for that, Ritu. Just request you to stay on. And I wanted to talk a little bit about the metal space as a whole as well. What is it that you make of the kind of earnings we've seen so far, and on account of the kind of cyclical nature, the volatility in commodity prices, does it seem like the fundamentals of the metal sector are going to forever be on shaky ground?
I would worry that the fundamentals will indeed be on shaking grounds for at least foreseeable quarters. The global economics also dominates the metal sector significantly. We do try to buffer our stocks from them, but that's not really possible. And I would personally stay away from metals for now, though we might see some stock-specific movements. But from fundamental perspective, not a sector that I'd like to invest in.
Is there that clear bifurcation as well when it comes to the banking space on account of the kind of alarming earnings that we've seen for the PSU banking space? Would that be an avoid? Do you garner a little more comfort from the private banking names, particularly some of the large marquee names?
Absolutely. As we spoke a little earlier, clearly the preference is for private sector banks over public sector banks at this point in time. Of course, public sector banks, once they stabilize, have a huge upside to offer. But for now, there's going to be volatility in the stocks. There's talk of mergers. Recapitalization will be a challenge. We are yet to get a comfort that the worst is behind us. And hence, in this time frame, I would think private sector banks is a preferred investment destination.
Okay. Good chatting with you, Ritu. Thanks much for taking the time out and analyzing what really is going on with the markets in Street View at lunch.